Welcome to it then. My name is Arabile Kumete. We're live for you at the Johannesburg Stock Exchange as we get to unpack the market picture and get you to grips with what has happened around the globe when it comes to the world of investments. Well, it started off poised to rally. That was the Asian market. It seemed like it was going to go up. All for money when we saw the oil price even head into what was initially a positive direction. But all those have actually gone in the opposite direction now, and things have moved into negativity, particularly out in Asia, as that market went into negative tilt for both the Hang Seng and the Shanghai Composite, which both closed down 1.2%, a 0.86% fall for the Nikkei then out in Japan. So negativity reigning supreme out on this front, red across that board. But as I said, the Asian market was poised to gain, which means that the rest of the globe was meant to head in that direction. Perhaps investors looking for some risky assets as well. Well, it seems that Europe is still maintaining its flavor somewhat. 0.5% higher for the FTSE 100 out in London. If you go on over to Germany, it's 1/3% stronger for the DAX, while the CAC 40 in France is just over 1/3% better off as well. 21 points gained there. 0.75% higher for the JSE All Share as well today. So some positive numbers. Are we headed towards 70,000 points? Can we reach that before the end of the quarter? That is, of course, a distinct possibility. It's at 68,046 in this lunchtime trading picture, though. Industrials have gone up more than 1%, with platinum miners going up 1.1% as well. Gold miners going down ever so slightly. It wasn't enough to deter the resources from going into some positivity, though, all in black there. Banks have also gone higher today, taking financials up with them, while the listed property space is up 1.3%. In terms of stocks that have also gone higher today, Cashbuild, Liberty, Lighthouse Capital have also managed to gain. Cashbuild taking on a whole 10% gain today, while 8% higher for Liberty, 2 degrees there. In terms of negative counters, African Rainbow Minerals has gone down 3.35%, 291 Rand a share. They're set to actually put out their numbers then tomorrow, so we'll see how things fare on that front. Also then we go on to the commodities board, a bit of a mixed one. Down goes Brent crude oil. Unfortunately, though, not enough to deter the oil price or the petrol price here in South Africa. We will indeed see that petrol price go a whole lot higher in this month. Of course, tonight is the time when that price inches higher then as well. Platinum stocks, platinum itself, should I say, 0.5% stronger at this lunchtime trade. So too is gold, sitting at $1,730 a fine ounce there. Weakness as well for the local currency against the major currencies in the world. 15 Rand and 5 cents for a US dollar. A euro will set you back 18 Rand and 10 cents, while a British pound is 20 Rand 92 odd as well. The Bitcoin pretty much flat really when considering how much it's moved of late. Let's hopefully then have a chat then with Owen Nkomo from Nkunzi Wealth. Hopefully we'll get a sense of that conversation in a moment or two, really just unpacking how the market is perhaps looking towards other kinds of investments. It seems that the likes of Amazon, Facebook, Apple as well have all certainly taken a little bit of a hit, and those were the big gainers heading out of last year. Then we saw markets continue to climb. Even the S&P 500 traded at its best day since June the 5th last year in overnight trade then as well. So that tells you that there is a sliver of positivity across the board. So it really does get interesting for the markets out on that front. What does it mean though for the local bourse? Well, we hope then that the risk adjustment that investors put in play will mean that the markets move a whole lot higher. We have certainly taken some sort of gains then from the rest of the world. The $1.9 trillion stimulus bill out of the United States means that if that does get approved and finally gets its kick on, more money pumps itself into the global economy. And with more money, the ability to head into riskier assets like South Africa's All Share, like the South African currency, you could certainly see some sort of positivity there. Owen Nkomo from Nkunzi Wealth joining us now, though, as we get to unpack just a little bit more of this market. Owen, thank you so much for the time. Appreciate it. The market's now on the up by the seams of it, but I mean, the question is, are we still in a bull run overall here? What is actually driving markets?
The bulls are back, Arabile. The bulls are running. They are not stopping. The market up 0.7% today, and I think everyone is basically tired of sitting on the sidelines, and they see that money coming into the markets, particularly in America, is going to help keep the valuation on securities elevated for a protracted period of time, which is relatively ironic if you think about the fact that we've got people starting to worry about interest rates going up in America. Even our own interest rates have started to reflect that potentially we could see a reversal in the interest rate cycle, but which could have pushed markets lower. But I think the sentiment is positive. We're not talking about people going back to work, countries reopening, or going to lower levels of their lockdown. The economies might start to work once again, and we obviously have the commodities cycle also pushing that sector higher, Arabile, across the world. I think people have accepted that maybe things are going to be different from an investment perspective. What's important though is for us to continue to see an improvement on the growth across the world in terms of GDP, which will say that our euphoria we're seeing in the markets is being driven by something that's actually going on the ground. It's matched by the real economy that is growing. And I think those are the things that are driving the markets.
Yeah, you've spoken about that commodity drive where it just seems like prices are headed in a more positive direction. Does that mean that the sense here is still that you'd rather invest in the metal than in the metals business? So you'd rather go into gold or platinum itself than to really go into the Anglo Platinums, the Anglo Gold Ashantis of this world?
No, look, I mean, it all depends on the valuations on the stocks, but the major driver at the moment seems to be precious metals, with the exception of gold, which is struggling, relatively speaking, but it's had its run in the past. But I think what's happening at the moment is that you are seeing a lot of guys still piling into the platinum stocks and piling into some of the other precious metals. We're seeing a lot of buying in the energy space as well, with all the oil derivatives trading better. And, you're seeing the price of oil trying to knock at $70. Looking a little bit difficult, but you know what, Arabella, I think one day we'll wake up and the price of oil is going to be above the $70 mark, which is going to obviously be bad for us because as we have seen overnight, we got a fuel increase. We might see a few more of those coming in, might start to talk to inflation, and consequently interest rates, as I've said, might start to reverse from what we know them to have been, trading at 3.54% on a repo rate. We might start to see the governor and his team at the Reserve Bank think differently about life.
Yeah, it gets interesting though, because one would think that if we try to push it lower, it's the kind of environment you certainly can push it any lower. Is the carry trade that we're perhaps looking at when it comes to the rest of the globe still the only driving factor perhaps when it comes to interest rates and keeping them at their current levels? Because one would say that with inflation still remaining at the lower end of the target, surely it means that we should be trying to cut rates a whole lot more, according to what the Reserve Bank has always spoken out about.
So remember, the Reserve Bank will always talk to inflation. They will always see where inflation is. If inflation stays lower, which luckily at this stage showing that it's not going to rise at any time soon. But obviously the second round effects of a higher oil price, if that were coupled with a weaker currency here at home, you would see inflation pick up quite significantly. But we've had good rains, we've got good harvest, and I don't think pricing on food is going to rise aggressively, Arabile. So I do think there's a moderate chance that inflation stays where it is and it moves up maybe marginally higher, which doesn't create a very big threat of higher batches of interest rates increases. But on the carry trade, yes, certainly the carry trade is pushing the markets in the direction that the interest rates are going, where the bond prices are going down and the interest rates are starting to go up. And I think the trade will carry on for a bit of time. But in my view, people will go back and look at the fundamentals and say, is there enough cushion from the economy in terms of inflation going up? And if there is enough cushion, I don't think that the carry trade will carry on longer than it should. And the conversations in America in terms of interest rates, very important to watch, Arabile, because that's what informs what everyone else ultimately does with their own interest rates.
Yeah. Okay. Very quickly then, we did have the finance minister deliver that budget speech just less than a week ago. Yesterday then, we see the unions out, particularly in the public service sector, saying, well, they're looking for CPI plus 4%. And then word from COSATU is that they're saying, we understand that the economy isn't doing well, but that's why we're not asking for double digits. Your thoughts on all of this story?
You make me laugh. I think, Arabile, the problem in the markets and with the rest of the economy and business that everyone is always going to fight for their corner. No one is coming to the center and saying, guys, this is a different environment. The economy is struggling. Government expenditure is too much. So if one union does get, the double increases they're looking for, all the other unions are going to start asking for that. Yes, we need our people to keep up with inflation. Expenses are increasing, etc. But I think we need to keep the engine running, Arabile. We can't aggressively demand huge salary increases in an environment where economy hasn't recovered. I think let's be a little bit patient, Maybe let's keep with the inflation increases if possible. Otherwise, we're just going to collapse the whole system. You're going to collapse companies, and you're going to just see the government wage bill particularly increase. But at least that's a conversation that gets handled differently. I do think we need to be realistic with our expectations for increases on wages, Arabella, for the sake of the country, not for the sake of one particular union. Let's think, as a country as opposed to individualistic thinking.
Yeah, fantastic. Okay, Owen, always good chatting to you though. Thank you so much for the time. Really appreciate it. Owen Nkomo there from Nkunzi Wealth joining us then to help unpack that market picture. That does bring things to an end then here at the Johannesburg Stock Exchange. Thank you so much for joining us. We'll continue to unravel and let it all kick into gear then for you and give you a sense of where the markets are at and what exactly is driving it all. From me and the team here at the Johannesburg Stock Exchange, thank you so much, my